Yes, good afternoon, friends. Yesterday continuation. Uh, Foreign direct investment in banking sector. Within the banking sector, foreign direct investment in private sector banks is permitted up to 49% through automatic route, and beyond that up to 74% through government approval route. FDI in public sector bank is permitted up to 20% through government approval route. NBFC is a company registered under Companies Act 2013, engaged in the business of loans and advances, acquisition of shares or stocks, bonds, debentures, securities issued by government or local authority, etc., and regulated by RBI. NBFCs is playing an important role in sustaining consumption demand as well as capital formation in small and medium industrial segment of the country. The reach and last mile advantages of NBFCs have empowered them with the agility and innovation with the cutting edge technology in providing formal financial services to underbanked and unserved sections of the societies. NBFCs can be classified on the basis of liability structures. NBFCs are subdivided into deposit taking NBFCs, which accept and hold the public deposit, and non deposit banking NBFCs, which source their funding from banks and markets. Activities undertaken. NBFCs are classified into 12 categories, that is Investment and Credit Company ICC, Housing Finance Company HFC, Microfinance Institution MFI, Infrastructure Finance Company IFC, Infrastructure Debt Fund IDF, Core Investment Company CIC, Factor Mortgage Guarantee Company MGC, Standalone Primary Dealer SPD, Non-Operative Financial Holding Company NOFHC, Peer-to-Peer Lending Platform P2P, and Account Aggregator AA. ICC is the investment and credit company is the most prevalent category among them. Systemic significance. NBFCs were previously classified as systematically important, that is NBFC ND, with asset size of 500 rupees crore and above, and all deposit taking NBFCs irrespective of asset size. RBI has introduced SBR framework, a scale-based regulatory framework for NBFCs with WF 110 2022. The framework categorizes the NBFCs in 4 layers based on the size, activity, and perceived riskiness. NBFC base layer, NBFC BL னு சொல்லுவாங்க, comprises of non-deposit taking NBFCs below the asset size of 1000 crore rupees. NBFC middle layer comprises of all non-deposit taking NBFC with asset size of 1000 crore rupees and above, and all deposit taking NBFC upper layer comprise which are specifically identified by RBI as warranting enhanced regulatory requirement based on the set of parameter and scoring methodology as per SBR framework. The top 10 eligible NBFCs in terms of their asset size always reside in the upper layer irrespective of any other factor. Further, some NBFC identified on the parametric analysis having systematic interconnectedness would also be included here. NBFC top layer, it can get populated if the Reserve Bank is ideally it remains empty. Top layer shall ideally remains empty. This layer can get populated if Reserve Bank of the opinion there is a substantial increase in potential systemic risk from specific NBFCs in the upper layer. Such NBFC shall move to the top layer from the upper layer. Key performance parameters will be shown here. Reforms in banking sector we'll see in next video.